All right, good morning, folks. It's just before 6 a.m. on Wednesday, December the 16th, 2020. This is our recap from yesterday, which was Tuesday. We only had one trade, and it was a closing trade here in McDonald's. This 195, 192.5 put, we went ahead and got half of the credit, just a little over half the credit. We sold this 41 cents. And bought it back for 19 cents. So let's go ahead and just take a look at that trade. You can see I was looking at Facebook yesterday. MCD. Okay, so we opened this trade 8 days ago. Let's just go to the account. Let's just look at MCD. That way we can see the exact date that we put this trade on. So we put this trade on the 7th. So let's take a look at our chart. Okay, here we go. So we essentially pinned the bottom of this trade, right? So we pinned the bottom of the trade, sold this put spread all the way down here at 195, and then we saw the market rally. We actually sold this, though, for January 22nd, so we still had well over a month of potential on this trade. You can see 41 cents, bought it back for 19 cents. And essentially what we did is we just pinned the bottom. This looked like a really nice bottoming candle. And so when we look at the RSI too, so let's just go ahead and add that study. You can see that on the 7th, we were really nearing that level of oversold, right getting towards that 30 mark, with a security like McDonald's, right? This type of security that blue chip, we know McDonald's, we know the type of security that it is, we know the type of trade that it is. These type of trades for me are really high probability because we know that they're blue chip, we know that they're again just really good companies. And we can play the RSI, right, almost every single time, unless we have, a market crash like this. We're going to be able to play this RSI most of the time and generate a profit here, right? So we're going to be able to generate this type of profit, and so. Really systematic here. Low RSI, sell the put spread below it, profit on the way up, or profit through time decay as it doesn't hit our short strike. Of course, we had talked about what we would do if the short strike was challenged. We, of course, would have rolled this put down, right, down and out to take in additional credit. Thankfully, we didn't have to do that, and we were really easily able to just bank the credit here, take the profit, 8-day hold, and then move on to our next trade. Okay, so we moved on to our next trade already. We've reinvested these profits into a new trade, and that's the name of the game, right? We compound these profits, we compound our gains, whether it's our UVXY strategy, whether it's our leveraged ETF strategy, which of course we go bigger, we go much larger size in on those trades than we do these individual caps, due to the fact that there's for me at least, there's directional kind of long-term directional guarantees with securities like UVXY, with LabD, with SOXS, with SPXU, and so we know that those are eventually all going to, the proverbial saying is go to zero. Whereas McDonald's, right, you could see something like this where it takes a long time for those short strikes to, to get hit, right, or for us to profit on these. And so there are a lot of variables, which is why I go much smaller on individual names than I do on our UVXY or our leveraged ETF strategy. Okay, so that is the trade yesterday in McDonald's. If you have any questions, feel free to reach out to me at Ryan, RYAN, @sellthatoption.com. Otherwise, happy trading, and let's finish this week strong.